Yeah, I mean, I think that certainly seems to be where things are headed right now. And you yourself have been one of the loudest voices advocating for leveraged Bitcoin equities. This July, we saw a bit of a correction. Does that in any way, I mean, it's seemingly not, but I'd love to hear from the horse's mouth itself. Does that shake your conviction at all? Or do you think this is just typical growing pains of a new asset class?
Yeah, this doesn't shake my conviction one bit. This is a very long journey. When you're taking the other side of the trade of the devaluation of the US dollar, I feel very comfortable with any of those positions because I don't think that the spending and I don't think that the printing is going to stop. And with Bitcoin being the most pristine store of value asset that we have available to us today, the companies that are capitalizing themselves on top of this asset are putting themselves in a position for very long-term success. And it's turning the focus of these companies to generating shareholder value in Bitcoin terms. And that's a really new idea for a lot of investors, and it's one that they're having to wrap their head around, but they're starting to see the power of that. And MicroStrategy now having the change in their earnings to fair market value on their Bitcoin just really kind of shocked the world with a massive earnings quarter with $10 billion in net income and $24 billion in guidance for the rest of the year. That's going to raise a lot of eyebrows and people are going to start wondering what's going on here. And what they're going to find on the other side of that question is radical transparency for your investors and an iron will to accumulate Bitcoin and raise the Bitcoin per share for them.
Interesting. And Sequin's partnered with you and your team at Swan for their strategy, buying at the time Bitcoin near what was all-time highs. In hindsight, would you advise companies to pace their allocations differently, or is there just never a bad time to buy Bitcoin if you're playing the long game?
There's never a bad time to buy Bitcoin, and you're never going to be able to know exactly what the market's going to do at any time. We're getting more used to the shakeups that come with the Trump tariff talk. That's one that's been hitting the market over and over again. But fluctuations in Bitcoin when you have a long-term thesis is just noise. In the community, we all seem to know or think we know where Bitcoin's going to go over the long term, and we have massive conviction that this is going to be $1 million plus asset here in the not so distant future. So I think that regardless of when you're buying Bitcoin right now, if you just look further down the path and you see what's going on with the macro economy, you see the impacts of AI coming into the economy, you see the spending bills, you know that the debt's increasing and they're going to have to deal with that. You start to feel very confident in your long-term outlook here. And I think for Saquon's and for all of the other companies that are adopting this strategy, they see that trend continuing as well. And for Swan, partnering with a company like Saquon's is a huge moment in this industry because it's really the first deal of its kind where they're bringing in a partner with a company that's Bitcoin native. Bitcoin is core to what Swan's been doing since the very beginning. And we've been helping our customers accumulate Bitcoin and custody Bitcoin. So we understand, how to accumulate Bitcoin at scale and how to make sure that you're putting in robust risk frameworks to make sure you're protecting that Bitcoin on behalf of your customers. And that's something that corporations have a learning curve around as well. And so luckily we're here to help them really accelerate that journey and put in the right framework so they can pursue this strategy for a very long time.
Yeah, and I was really excited when I knew you were coming on the show because you mentioned strategy. They've kind of been the belle of the ball as of late, specifically with this corporate Bitcoin treasury plays that we've been seeing. I know you've studied Bitcoin treasury stocks like Strategy and Metaplanet very extensively. What do you think makes them so unique, but maybe also potentially misunderstood as we enter this new era of Bitcoin treasuries?
Yeah, Strategy and Michael Saylor are clearly the pioneers in this space. Someone has to take the risk and really define the rules of the road for everybody else to be able to follow. And that was what Saylor really did. He had to go into each of these individual markets and show that there was demand from these investors that would invest in this type of a value proposition. And he's been doing that through the equity markets, through the debt markets, now through the preferred markets. And that's making it possible for all the companies that are following in their footsteps to really be strategic about how they deploy this playbook. Metaplanet in Japan, they found a really unique opportunity, and Simon and Dylan have been capitalizing on it in a big way where they've got a tax arbitrage over there where it's actually better for investors in Japan to get exposure to Bitcoin through what's called their NISA accounts because there's a tax benefit. If they're holding Bitcoin itself and trading in and out of Bitcoin, that can hit them with more than a 50% tax rate. But if they're holding a company like Metaplanet in their NISA accounts, it's down to like 20. And now you just saw them announce that they're launching perpetual preferreds in Japan. And that's a huge moment for a company like Metaplanet because Japan has a really unique rate environment. Their rates are incredibly low. So they're yield starved. And so being able to bring a product to market that's going to offer, I believe the cap on what they're offering is about 6%. That's huge compared to, their overnight rate, which I believe is around 0.5%. So you're seeing innovation globally now in this space. It's not just contained in the US. You're seeing these Bitcoin treasury companies pop up at every market, and each of these markets has something unique to offer. But it's all made possible by Saylor really blazing the trail, taking the risk. He had to endure a bear market and show that you can come out the other side with this strategy as long as you're controlling the leverage you're putting it on your balance sheet and you're being transparent with your investors so that they know exactly what steps you're making and why you're taking them.
And for those same people that are like, I don't feel like I have enough right now, which is pretty much everybody in the Bitcoin space, you can never have enough. What's your take on Bitcoin's price right now? Are we still undervalued? Are we near the top of this cycle? There's been a lot of talk that the 4-year cycles are done with, like CIO of Bitwise, Matt Hogan, has said, I don't think we're going to be seeing the traditional 4-year cycles anymore. It's going to be just kind of a long, slow creep up and to the right. What are your thoughts on that? Is 123 the top for 2025, or do you think we're going to see another rush here in the not too distant future?
Well, I don't think we're anywhere near the top yet. And I think that Matt's right. You've also heard Michael Saylor say the same thing, right? He told everyone winter's not coming back. And he very well may be correct. You got to realize that with all these corporations coming in, you've got a different type of buyer in the market now. The past several cycles were really guided by traders and venture capital that was trading in the market. And so when you would start to see these high leverage plays being put on, they would hit liquidations. You'd get the cascading liquidations. It would impact the price of Bitcoin in a very big way. What you're starting to see now when you have companies like Strategy and Metaplanet and Saquons that are out here who are putting in a treasury strategy that's only directionally long. These are not traders. They're accumulating Bitcoin. That Bitcoin's going on the balance sheet, and that's where it's staying. You're building a new type of structural bid underneath Bitcoin. There's always buyers underneath it now. And I think it's a matter of time before sellers at these levels get exhausted and the price has to move up to find where that next tranche of sellers is going to come from. So I do think that we have a structurally different market around Bitcoin. And, seeing it drop from 123 down to the 115 range, if you've been in Bitcoin long enough, you learn to expect periods of volatility, but the volatility has actually been dampened over time as we've seen more and more buyers coming into the space. So I think that eventually that demand is going to overwhelm the supply. And Bitcoin with a truly fixed supply, the only thing that can give is going to be the price. And I think we're going to see a repricing much, much higher.
Yeah, no, I'd have to agree with you. I think structurally we're in a completely different era during like Bitcoin's maturation process with all these big companies jumping on board, and we're no longer driven by retail traders that are trying to, carve profits off of frothy prices and, do these day trades. But with the treasuries, it does beg the question. We haven't seen this before. And aside from MicroStrategy, as you pointed out earlier, we haven't really seen many of these treasury companies and how they will react or survive a quote unquote bear market if we see one of those again, given the traditional cycles we've seen in the past. How do you see that playing out? Do you think maybe some weaker hands might be over leveraged and then they could sell off? Could that cause a domino effect for companies that didn't buy in as early as MicroStrategy? Does that concern you at all as we go forward and kind of figure out this new phase of Bitcoin's maturation process?
It really doesn't concern me because I think there's been a huge amount of education that's happened over the past several years. You've got the learnings that came from a company like MicroStrategy that did have to survive a bear and a pretty brutal one. You had a lot of bad actors in the market at the time that were putting a huge amount of selling pressure as they were unwinding. And Strategy had to survive and come out the other side on that. And they had instruments that weren't as resilient as the ones that they have now during the time. You used to see things like fixed debt or fixed term secured debt on the balance sheet, which is something that a lot of these companies now want to avoid because you don't want to give up control in terms of how you execute. You don't want to put yourself in a position where you can be liquidated. So most of these companies are now opting for non-recourse debt. And that means that Bitcoin can draw down, but you're not at risk of being liquidated at any point. So I think that there's a lot more conviction out there with the executives that are implementing this playbook, and they're implementing it responsibly so that you're building a resilient business model that can survive through bear markets. Now, whether we see a significant bear market is completely up for debate right now. But the other thing that I would point out is people think that this market is significantly larger than it is. You've got really one true player of scale out there, which is strategy, and everyone has seen and sailors communicated very well just how resilient they are at this stage. But all the other ones are very small in size. So if one or two of these companies do decide to get levered and maybe they take on secured term debt and they have a liquidation event, you've still got the structural buyers from all these other companies that are deploying it responsibly. And most of these other companies are still very small in scale. And the ones that achieve scale, I believe, are going to do it responsibly because they want to attract institutional capital. And in order to attract institutional capital, you have to have robust risk frameworks. You have to constantly be evaluating and stress testing your model to make sure that you're ready for whatever the market throws at you.